The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
From TFNN, welcome to the August 20th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 in the afternoon. I want you to know I am absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't call in, we've got your back. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 99 points, 25,768 is the print. S&P's up 7.5, 2857. NASDAQ 100 back 5. Russell's up 5. Semis back 5. Sounds like 5 is alive. Trannies, they're up 1 3/10%, 147 points to the upside, 11,375. NASDAQ Composite is up 5. There's another 5. New York Stock Exchange, not 5, but 57. It's got a 5 in it. Wilshire 5,000. That's up. I said 5, didn't I? Another 5. Looks like today is a day of 5s. Of course, that's never going to change for the Wilshire. But it's up 100 points. That's 0.75%. No, 0.3%. Spot volatility next trade down to 1255. That's below its 50-day exponential moving average. Gold trade out at 1195.50. Something to think about. You've got silver up 4 cents, light sweet crude up 16 pennies, leading the charge to the upside dollar-wise. You've got Netflix up 9, Booking Holdings up about 10, Granger up about 8 and change, China Biologic, Lululemon, Allergan leading the pack. To the downside, the shakers out there. Legan Pharmaceuticals off 8, Lannett down 8, Tesla off 6, Align Technologies 4 and change. The Seiji Therapeutics down $4 and change, and Amazon off about $4 as well. Of course, I want to look at what you want to look at, and that means that we've got to go take a look at our first requesters out here. The first request coming in from Tucker. Tucker wants to take a look at the GDX and gold. So let's go take a look at the GDX first. Let's go look at its 3 time frames. And Tucker said that he is looking for, he's not in, but he's looking for a solid turn up. Well, that's Netflix. We don't want to take a look at that. We can take a look at Netflix, but that's not GDX. Let's change this out. So first, Tucker, you're going to see that the GDX this morning, I'm talking about this morning, not at 8 o'clock, but not until about 9:30 this morning. But at 9:30 or so this morning, you got a brand new TAS market profile. Here is the daily time frame chart out here. So the very first thing for us to take a look at, well, let's do this. Let's turn price off. The reason why we want to turn price off is because you and I want to do a little doctoring out here. We want to understand. We want to do some Sherlock Holmes investigative work. And by doing that, we can see that the structure of this profile, bottom of which is 1844, center line is 1872, the top is 1930. So you've got somewhat of a wide box, 1844 to 1930. That is the spread. But the center line of that box is closest in proximity to the bottom. That tells us the structure is bullish. So, Tucker, what you should anticipate with regard to the GDX, not even looking at price, is that the bulls should have the upper arm here or the lower arm, or whichever arm they need to push price up to 1930. Now let's go ahead and put price back on the screen out here. Does it mean it will happen? No. But are odds favoring that it will happen? As long as price stays above 1872, right now it's at 1879, then the odds favor that as a yes. Now, the question that you have to answer, Tucker, for yourself is, if you see price move up to 1930, is that a solid bottom? Now, each of you have to answer that question for any of you that would be interested in investing inside the GDX. If you are more conservative in nature, then what you're looking for is a close above the top of the daily profile, something the GDX has not done. The last time it was above a top of a box out here was on July the 10th. Today is August 20th. So we can see, about 40 calendar days out there, give or take. But that's what I would be focusing on if I were you, with regard to the GDX. So if you're thinking that this is just a counter trend rally, the GDX ought to find resistance at 1930. If it's something more than that, it'll clear 1930 and move higher. Higher to where? That's a good question. Could always move back all the way into the low 21s out here. That's the bottom of that consolidation that it had broken out of. So that's what I see when I take a look at the GDX. What else can I see out here? 1930. If we take a look where Stevie's red line is at, it's at 1936. So now what you've got, Tucker, two very key levels of potential resistance out there that would then be able to identify, if price moves above those levels, that you have that solid bottom that you are looking at. Am I worried about the gaps on the way down in the GDX? It's something to consider. There's no question about it. Something to consider. But I'm going to go with the current live information, and we'll deal with gaps if price is able to get up into those areas out there. At least that's my take when I take a look at the GDX. You also asked about Goldilocks out here. And if we take a look at Goldilocks, let's do this. You can see that it's trading out at 11.95. Now, what I'm going to suggest out there to everybody that's listening in, because Tucker's looking for a solid bottom in the GDX or maybe in gold, and I will give you one figure to pay attention to, at least for the day, and that's going to be the figure of 11.98. Gold is trading at 11.95. Will $3 make all the difference in the world? May not be your world, but it'll make it in Stevie's world. And if you see gold trading above 11.98, now that could be at 7 o'clock tonight. It could be at 2 in the morning. If it doesn't happen, if it goes up to 11.98, it gets kicked right back down. It'll be kicked in the teeth, so to speak, out there. But if it clears that level, and I'm not going to share with you why that number is what it is, but certainly subscribers know the reason why out there, then what I would suggest, Tucker, is you've got a solid bottom, and the GDX will at least get up to those highs that we took a look at, and maybe beyond. So thanks for asking. Thanks for writing in. Oh, you want to take a look at gold even further out here? We can go do that. Let's take a look at Goldilocks. What do we want to take a look at in gold? Let's go take a look at the market profiles out here. We'll come back to the sugar one for Ruby when we come back from this break. Let's see. Can I squeeze gold in? Here's gold. Here's gold on a 60-minute, on a 240, on a daily. See, the daily chart's got 1209. So that's not where Stevie's number comes from out here. If gold gets above 11.94, that would be very interesting as well. Steve Rhodes will be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 92. S&P is up 7. So Ruby in the Tiger's Den has a sweet tooth. So let's go take a look at her sweet tooth, which is sugar. No sugar tonight in my coffee. And Ruby is long. So Ruby, as we take a look at the daily, the weekly, the 240 and the 60-minute time frame charts out here, you're going to see that 3 of the 4 have got those red shoots, red bars out there. In this case here, they're below. So the daily, the weekly, the 240-minute is down below some support out there. However, because you're in it to win it, so to speak, what I would be focused on is the 60-minute time frame, the 1-hour time frame out here. Because what we can see is that what sugar has done, has failed to do, is really be able to close above with any kind of conviction the top of its 60-minute time frame out here. It's tested it so far this morning, or this afternoon, I should say. So the price to watch is $10.12. You're trading at $10.11 as we speak right now. If you can see silver close above that, then at least you've got something in your court. Right now, it's resistance. What you don't want to see is a close below $10 out there. That's the bottom. Now, this profile, it's small in nature. It is bullish in structure. It is just a 1-hour time frame. I do not know how long this market profile will exist, but you can see that bullishness of it, the structure. So you're really looking for a close above 10.12. Other than that, I don't really have anything else that I can provide you on sugar to suggest that we see a turn as we speak right now. So I hope that helps you out. We've got a caller on the line. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm very good. Thanks for taking the call. And right off the top, wanted to thank you for your assistance on Friday. I called in and you helped me bisect the ETF known as CQQQ, which is the Chinese Internet-related plays, a U.S.-based ETF. So,
Yes.
So thanks a bunch on that. I put on a trade just as we were speaking, and that thing is working. So thank you.
Hey, great. Glad to hear it. Well, how can I help now? Because you're only as good as your last deed. So let's see if we can get another deed out there.
Steve, I wanted to ask your assistance, please, on the S&P 500.
Yes.
You and I have spoken many times, wherein I have shared a concept I regularly repeat, and that is from an analytical perspective. When I put on speculations, I always start with simplest and most direct first. And if I can use something that's very simple, I go with it. Many times, of course, simplicity doesn't give you the answer, but but I've had enough experiences over the years where it has. Anyway,
Yes.
Going to simplicity. You and I and other people that we collaborate with know that back January 26, when the S&P 500 cash was making its high at 2872, I saw a very clear reason to try on a short at that point in time, because 2872 on the S&P cash was a level at which the rally from that 2016 bottom all the way up to 2872 was exactly identical, literally within a point or two, to the distance of the S&P rally that occurred from the October 2011 bottom into the May 2015 top. So simplicity there was, hey, on the monthly chart, it was a nice, clean AB equals CD pattern, literally to the point. I think it was off by 1 or 2. Anyway, and that has that stood me in good stead. I think is that the right phrase? May not be.
No, I like it. I'll take it.
Yeah, from January 26th into the current time, looking for shorts and then covering all that jazz. So here we are on the S&P, right up against that level again. Is there anything that you see in your work that suggests that taking profits on longs and instituting shorts on the S&P cash right here, over 2855 S&P cash, is not a winning, or has the prospect of being a winning short sale trade? That's my question.
So let's try to answer some of those questions. The very first thing, folks, if you're watching us on Tiger TV, what John was talking about, there's 4 rectangles on my screen right now. The first rectangle was measuring, in essence, from the low in October of 2011 to the high in 2015, which we know there was a consolidation. And all I did was just duplicate that exact number and then attach that, in essence, to the lows of 2016. And you can see there's what John was looking at. And that was we'll call it a measured move, an equal move out there. And he said, okay, we saw a decline or consolidation back in 2015. Maybe we will see the same pattern. Now, interestingly enough, I'm going to go ahead and get rid of those rectangles, only just to clarify here. The same type of retracement that formed in 2015, that was from the high to the low coming in October of 2016. I duplicated that as well. And in essence, within a buck or so, we got the exact same decline and the exact same correction into the lows here in February. So the patterns at this stage here are similar. The question would be, if we do get a bust out above 2872, will we have another one of those moves? That's really not the question that John called about, but the question being, what do we see? What do I see out here? Just, I guess, in general, with regard to the S&P 500. One of the things, if we go back to kind of just some simple concepts out here, is that price, the S&P 500, trading at 2857 right now, is trading right inside the swing point from January 26. So the exact point in time in which John said, okay, that equals my measured move. I'm going to go ahead and take a short position out here. When price moves into a swing point, whether it's with volume or not, if it's with volume, it says you ought to go up and test at least the high. That's at 2872. We're in summertime. Volume inside the markets these days, I think, is only one factor to take a look at, especially if you're somebody that's going to go look at the SPY and say, okay, what's the SPY volume today versus what it was in January even? Because there are so many ETFs out there that you can utilize to trade the S&P 500. You'd really have to conglomerate them all, and I don't even think that's a word out there, but you would really have to combine them all in order to kind of have any type of real value out there. Here's the simple thing. If you trade inside this swing point, volume or not, you're likely to go up and test the 2872. So there's no rejection inside the S&P 500 until we see it close below at least the bottom of that swing point, which is 2846. So just using that, John, I would say more likely than not, the S&P is going to go test that level. Now, all of the markets right now are really kind of doing the same thing. But first, let me go back to the S&P by taking a look at the ES Mini. And inside the ES Mini, we have a brand new profile. Not a brand new, I take that back. We have a market profile that price is trading inside of. So it's consolidating, and this says the ES Mini wants to get up and touch 2864. Now, you and I know we may see that occur, and then a rejection, and then the S&P 500 may not get up and test its high out there. But I would be watching the ES Mini and watching that 2864 level. Inside of the Dow, the area that it's actually trying to get to is back into the level. This is not January, but this is the February 27th high of 2582. So I see that it has some resistance out here. If it busts above that, that would be positive for the Dow. If I take a look at just some simple trend line analysis, what this says to me is that the ES Mini has got to clear 2864. I hear the break message coming on. John, do you want to stay on through the break? We'll come back.
Yeah, I'd love to keep listening to you bisect. This is very helpful. Thank you.
Yeah, okay. We'll be right back with John in Philadelphia. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're on the line with John in Philly, and we're really taking a look at the S&P 500. But I need to, in order to really evaluate and determine what the S&P 500 is doing, it's also incumbent upon me to flip back and forth in taking a look at the equity futures contract as well. Now, on our screen right now that I'm sharing with you, I'm taking a look at the 4 daily equity futures contracts. The ES Mini is in the upper left, the NQ is in the upper right, the Dow lower left, and the Russell 2000 is the lower right. And John, one of the things that I see right now is that each of these contracts are doing the same thing. And by same thing, each of them are trading into a resistance level. Inside of the ES Mini, it's the bottom of that January 26 swing point. In the cash indice, we saw that price had traded into it. Inside the equity futures market, it hasn't. It's 28.6350. So to me, that is a level of resistance because we saw price stall here back on August the 9th. So if the ES Mini can get above 28.6350, that says, okay, game on. And it's busted through a level of resistance. In the NQ, this thing has been trading in a slight descending trend line, this little red diagonal area. And you can see that today's high approximately running right into that resistance zone. So it, too, is trying to take on resistance. It's not below support. If you take a look at a rising trend line, the same can be said about the ES Mini. Go to the lower left-hand panel, and the Dow equity futures contract, which has really had a nice move over the last 3 trading sessions, is now approaching its level of resistance. That would be 25,868. That is the high from February 27th. And if we take a look at the Russell 2000, you can see its trend line. So John and I are just trying to use some simple things. These are things that each of you can do at home as well. And so when I take a look at all 4 equity futures contracts as a whole, John, each of them are trading up into resistance. So where you want to go ahead and take a short position, I believe that was in essence the question, so to speak. Well, then yes everything is up at resistance. Even though if you just looked at you might take a look at the Dow and say, hey, look at what the Dow is doing today compared to the other indices or the transports or something like that. I see each of these 4 equity futures contracts near or close to a resistance without anything having broken out above that. So that's kind of what I see, and then it kind of makes sense to me why the markets are doing what they're doing, right now. Doesn't answer the question whether short is correct or not, or long, but everything. But look, I know you as a trader, and if you can see that everything's trading into resistance, that might give you another piece of information to add to those things to help make a decision, just kind of like we did on Friday and take a look at CQQQ out there. So that's
Thibault,
what I.
Thanks for bisecting all that. That added data is helpful. So we will know, I would suspect, in the next 10 trading days whether or not this area is pivotal or if, in fact, the bull run that began there back, I guess, April 2nd would be the kind of the
I would think so.
Point whether that is a ongoing phenomena. So thanks so much. We will see.
No problem. My pleasure. Thanks for calling. That was John in Philly. And just to kind of carry on with that conversation, I was going to give. So what I don't want to do is, and especially for those of you that trade the equity ETFs are out there, to start firing away at a short position inside the market. There are other things that really should be considered. In John's case, he's trading the futures contract, so he's got stops in place. Overnight it can rest easy. And if the trade, it goes against them, it's not a huge loss out there. And that could be different if you're trading those ETFs. If I take a look at, if you were to back me up against the wall, no reason to do that, but if you were just simply to say, where's a more ideal spot maybe to consider a short, it would be that these resistance areas, maybe there's new resistance areas, but basically these resistance areas hold. And we see the New York Stock Exchange advanced decline oscillator. That's panel number 2 on my chart. Right now it's printing out at 96 and change. It got above the 0 level on Friday. Maybe it was Thursday. When it's above 0, tells you that buyers are in control of the market. So we have conviction inside the New York Stock Exchange, kind of a wider swath of the market. We have the spot volatility index down below the 50-day exponential moving average. Both those conditions basically say we can use those as liquidity gauges. There's plenty of liquidity inside the market to buy every dip. In essence, that's really what it means out here, or to continue to push price higher. I would be looking for the 150 level inside of the New York Stock Exchange. A week and a half ago or so, I was looking as the advanced decline oscillator got down below 0. I was looking for it to make a run for the minus 250 level. That didn't happen. So I can't say that the plus 150 level is going to happen. but it does look like it's going to. And the question will be, can this advanced decline oscillator reading get above plus 150? A reading above plus 150 says you have higher prices to come in the future. Doesn't mean tomorrow, it means the future. I'm not talking years from now. I'm just talking like, you know, within the next 6 weeks, something like that out there. But when you get these 150 failures out here, and we've seen a few of them inside the New York Stock Exchange, and you're up against resistance in those other indices, that would be the more ideal spot to be looking at having the markets back up against the wall to go ahead and take a look at a short position. But all that being said out here, what you must know, and you must take this into consideration. And you and I don't get to trade these vertical markets, so to speak, very often. And that is what we are in right now. Those are the conditions in essence in place inside of the S&P 500. We're still looking at the S&P 500. Vertical how? Vertical from the standpoint that the global flow of capital is coming into the U.S. Lock, stock, and barrel. If we take a look at the Dow priced in pound sterling, it hit another new all-time high earlier this morning. If you take a look at the Dow in euros, it was very close. It missed it by a buck or so out there, but nearly at a new all-time high. By the way, in pounds and in euros, just to give you an idea, in pounds, the S&P 500 has been at new all-time highs for a long period of time. Really, it began busting through that level in June of 2018. This is not how markets or the S&P 500, by the way, makes a top. It doesn't do it like this. So anybody that you hear that tells you that the markets are about to make some kind of major top, bury your head in the sand. Because I don't know what they're looking at out there. Well, I know what they're not looking at out there. They're not really looking at what the global flow of capital is doing out here. Now, in the case of yen, it's been a few days since we've been in a new all-time high. It was about 10 days ago when the S&P priced in yen made a new all-time high. This all bodes well for the S&P 500 going on to new all-time highs out here. When John was calling, I guarantee you, I can't guarantee you, but I'm going to guarantee you he wasn't talking about trading his retirement funds or his 401k. And even if he was, which I don't think he was, I'm going to ask you to please don't do that. If you're long inside your 401k, which you should be, stay the course. Stay the course in the U.S. Money is flowing in. You and I get to look at this on a daily basis. This is a daily chart. So to a certain extent, for your long-term capital out there, this is nothing but noise, a daily chart. Yes, another new all-time high in pound sterling. They don't want to be investing in their indice out there. They want to be investing in yours, in mine, in ours in the U.S. That's the king dollar. Those are treasury bonds. Those are the stock markets here in the U.S. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Lee B writes in and says, "Hi, Steve. Hope your day is doing well." It is, thanks. I hope yours is too. I'd like to get your short-term target on the Russell 2000 IWM. When I say short-term, I'm talking 2 to 4 weeks. Thanks, Stevie. Lee in San Francisco. So, Lee, when I put this chart up on my screen, this is the IWM. To me, the lines are not as clean on this to be able to answer your question. But with regard to the IWM, the first thing that I would do is I would just simply draw that little descending-ish type trend line from the high out here on June 20th. Your next touch point is in essence July 10th. Your next touch point is July 24th. And that's going to be some clear resistance. So when you say, what's it doing for the next 2 to 4 weeks, we really won't know until we see what the IWM does as it gets up to that resistance level. If it closes above it, it tells you that price then likely wants to continue moving higher. For me, the trend lines that are a little bit cleaner, and I go back to the exact same time frame, by the way, the April 2nd level out here, and then the trend line gets just very clear to me. You can see when we take a look at the equity futures contract out here, how price is trading in the cone of silence out here. So you can see you've got a rising trend line that has acted as support, and you have a descending trend line that has acted as resistance. If you're to ask me right now, what do I think it's going to do over the next 2 to 4 weeks, I go with the safe answer. It's going to trade within this descending. It's going to trade inside this wedge pattern as it gets all the way down to that end of that cone, so to speak, out here. You know, and so that says you've got an upside target of just a few more buckaroonies out here, and you've got a downside target inside the equity futures contract of about 1680. So you're right around 1680 to 1704, give or take. Sometimes you can narrow it down a bit by taking a look at the daily equity profiles out here. So 1706 is the top of the daily profile, and I would expect that you're going to see the Russell 2000 make an attempt for that area. That would get you into that descending trend line as well. But beyond that, until we see how price handles that, Lee, you know, I would just be guessing. And I'm not really good at guessing. I'd rather just say, here's what the evidence tells us. The evidence tells you and I right now, based on when we took a look at that New York Stock Exchange and anticipating that there's enough market breadth to push the markets higher for a bit, that, and I'm not referring to the next hour or even tomorrow out here, you know, until we see some other data, looks like prices want to try to move higher out there. So I hope that that helps you, plus the other conversation that we had. JJ wants to take a look at Amazon. I have a few shares of Amazon. Where do you see the short-term to long-term for this equity? So let's go take a look. Long-term, I think Amazon is just going to scream higher, much like the markets are. Just as we took a look, in case you didn't really get my gist out there, these markets are moving higher. I know somebody might say, All right. So how much higher? Remember, we had 8,800 as a target for the NDX 100. You know, it's not exactly like we are a long way away from that out there. But that's not the eventual target. That was just a target out here. With regard to where our market's headed to, the Dow, remember, I've got the 30,480-ish. That's still in play. I don't think that's the end of the move, but you're only at 25,771. The S&P, just the A to B equals CD of it, which John and I just went through. But we were looking at a shorter term type of chart out here. It's got 3278 written all over it. 3677 there. The NDX 100, 7609 was the 1-to-1 A to B equals CD pattern. 8621 is the 1 to 1.272. That's where the NDX is headed to over time. Well, Amazon makes up a big portion of that, JJ, so that's where it's headed to. By the way, Lee, the Russell 2000, longer term, which you didn't ask, but longer term, 1896 just fulfills the 1-to-1 A to B equals CD, and 2155 is more likely where it's at. This isn't just on my charts out here. This is being shown on charts around the world. That's why the global flow of capital is coming. It's one of the reasons why it's coming into the U.S. It's coming in. Until that changes, these markets are moving higher. It's why I really am trying to implore you with regard to your retirement funds to don't trade those things. Keep them. And if they're allocated and you've got stuff in fixed income, God bless you out there, not because you sneeze, but because I really want you to get some blessings out there. Or if you're inside like emerging markets at this stage until we see some type of bottom, until the U.S. dollar index decides to weaken, and that's not going to happen anytime soon, it's why I want to make sure you've got all the blessings that you possibly can. But back to JJ's question specifically with regard to Amazon. If we go take a look at the 3 time frames out here, AMZN, we just look for a short term, what's going on, longer, you know, intermediate term time frame. You know, right now, Amazon's just trading inside of a range out here. That range on a daily basis is between its profile. The bottom is 1861. The top is 1925. I don't have any more real solid information to provide you for that. Long term, I think this thing just continues to scream higher. Doesn't mean you can't get a pullback or retracement. You won't get a pullback or retracement until you see price close below the bottom of its profile of 1861. If you do, then where's it head to? You come back to the prior swing point. That would be the trading day of July 31st out there. Then what you would try to do is you try to anticipate volume. You know, is it coming in with larger volume than the 5.7 million shares that traded then, or is it lighter volume out here? So right now, Amazon is just in a consolidation. You say you just have a few shares out there. Stick those shares in a drawer. Make sure they're in your retirement account, and don't touch them. I think Amazon continues to move higher. We've got John in Sarasota. I see, maybe he's in Michigan, but he says right now, John in Sarasota. What do you see for ASNA? So let's go take a look at ticker symbol ASNA. Not sure what that is. It is Ascena Retail Group out here. So on the daily chart for Ascena Retail, John, this used to have a high from June the 8th that had 10 million shares. And a few days ago, that was tested with 2.6 million shares out there. So tested with light volume. I think this might be a little yellow. No, let me see. Is this yellow out here? So there's what we're looking at, 474. And we're trading below it. So it attempted it again on August 15th, only 3 million shares. And attempted it again with 2.3 on August 16th. So right now, I don't see this as a bearish thing. There goes the voice for some reason. But what we also don't see here is that it doesn't right now seem to have the strength, the oomph, the pizzazz to take out that prior swing point. Because if it did, John, this may be the longer term for Ascena Retail Group. Then what you could be looking at is an A to B equals CD that would give you a price projection of drum roll Johnny. And I'm not referring to John in Sarasota. 594 is your 1-to-1 A to B equals CD pattern. Now that's a daily time frame. So on a daily time frame, we know price is trying to take on a swing point out here. On a monthly time frame, 623 is the number. So what do we come up with? The A to B equals CD pattern said 594. 623, not too far away from that. So that's what it looks like. The weekly basis also shows you that price is up against resistance. So I don't know where you're in, if you're in, all that type of stuff out there. But you can see daily-wise, we know we don't have the oomph. Weekly-wise, we know we're up against the top of the market profile. That's 474. Closing above that, volume or not, of course, you'd like to see it with volume. Last week, for example, was 11 million shares going against 29 million shares out there. So volume or not, but closing above resistance would be a good positive thing. So it looks pretty good. Looks like longer haul. 623 is in the cards out there. And that is for ticker symbol ASNA. That stands for Ascena Retail Group. That was for John in Sarasota. We come back, let's go finish off these questions here. Looks like the last one coming from Michael P. Great.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Michael P. writes in, says, hi, Steve. I know you already talked about gold, but could you also talk about what you think about the 1197 level? It seems gold has tried it for 2 or 3 times today, and it has held. So let's take a look at it. 1196.50 was the high at 4 o'clock this morning. Now, as price moved up there were about 3,100 contracts that traded during that. It's a 10-minute chart, by the way, that we're looking at. So I'm going to steal one of Obi-Wan Kenobi's tools where he likes to take a look at that 10-minute chart. So, Michael, 3,100 contracts traded. When price tested it, this is at 12:20 this afternoon, it did it with 3,300 121 contracts. In other words, price was pushing into a previous area with some more volume out there. Even though it rejected it, it was moving in there with volume. In essence, that is what you like to see. So if you're long gold, as an example, which I'm assuming you are based on your email out here, that's what you want to see. Now, the prior test, the most recent test, that took place at 1250. So at 1250, there were 2,500 contracts. Okay, lighter volume, but not like by a mile or anything along those lines out there. So what looks pretty decent, and to answer your question with regard to gold specifically, as long as price continues to trade above Stevie's red line, that's 1191. You can easily see gold moving up to 1245. I gave everybody the number earlier. I believe it was 1198 was the number. Be watching that. It doesn't have to take place between now and the end of today. It can take place overnight. With regard to silver, we had a request out here by Ruby, and Ruby wants to take a look at silver. And all I can tell you about silver right now is what it did today. Earlier, Ruby wasn't the best. When I say wasn't the best, it tested Stevie's red line at 1481 and found it as a place to find a rejection. So we don't have that in gold, but we do have that in high ho silver. So the number to be watching inside silver is 1481. Folks, thanks so much for being here. Always appreciate it. Thanks for all the questions, John, for the call. Would love to hear from you tomorrow, whether it's by email, whether it's by inside the Tiger's Den, or whether it's live. Anything will do. Stay tuned, folks. David White's up next. Your favorite polar bear and mine. Take care. We'll see you on Terrific Tuesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.